Today we will see bank stock analysis. Before buying bank stocks, one need to do thorough analysis, and doing bank stock analysis is not same as normal stocks. For example, for normal stocks, debt equity ratio is one of the important parameter which need to be zero or minimum. But for banks it is not the same. This will be high in banks because banks operate on borrowed money. Similarly, if you take cash flow, that is not important for bank stocks because it will give a wrong interpretation. But for normal stocks, cash flow is one of the most important parameter. So here we will see how to do a bank stock analysis using 7 simple method or 7 simple steps so that one can easily do the bank stock analysis with ease. So let's begin. The 7 points one should consider before buying a bank stocks are: first one is the deposits, then comes advances, net interest income NII, capital adequacy ratio that is CAR, gross and net MPA, Casa ratio that is current account to savings account ratio, and non-interest income. Apart from this, there are 3 other parameters that also we will discuss along with the video. So let's see each one by one. First one is the deposits. Deposits are the money which we give it to bank. In turn, bank will give interest for that. So it is an income for us, but for banks, it's a liability as it has to pay interest for that money. Deposits are of 2 types. First one is demand deposits and time deposits. Demand deposits are deposit which bank will get through savings account as well as current account. Whereas time deposits are based on timeline like fixed account and recurring account. So higher the deposit, better for the banks as it will improve cash flow as well as liquidity. The next one is advances. For better understanding, advances can be treated as loan. So these are loans given by bank. But technically advances and loans are not same. But for the easy understanding, here we will assume advances as loans. So these are loans given by bank to the customers. As advances are given to customers, they are assets to the bank as it will generate revenue income by charging interest as a regular income. So advance growth is the growth in advances. For example, current year assume bank has given 100 rupees for loan disbursement. For the next year, bank has increased 120 rupees. That means there is an advance growth of 20%. So always advance growth is an important parameter for banks. It will show how much bank can additionally disperse loans. So the third important point in bank analysis is net interest income, that is called NII. For understanding NII, first we will see how banks operate. Banks will get a deposit, for that they will pay interest, and using that deposit they will disperse loan. So from loan they will get a interest. So the difference in net interest will be the earning for bank. For example, suppose a customer deposit 100 rupees to a bank. Bank will pay 5 rupees interest to the customer. Similarly, that 100 rupees bank will disperse loan. And for that loan, bank will get a 12 rupee interest. So the difference between these two interest, that is 12 minus 5 is 7 rupees. That is called net interest income. If you see in terms of percentage, bank will disperse 5% interest to the customer and will get 12% interest for loan. So the difference in margin is net interest margin, that is 12 minus 5%, that is 7%. This is the overall concept of NII, that is net interest income. The next point is capital adequacy ratio called CAR. Sometimes it's also called CRAR, that is capital risk adequacy ratio. So CAR is a measure of bank's capital and is expressed in percentage of bank's risk weighted credit exposure. So for layman point of view, CAR means how much capital bank has against its risk. So technically, if the CAR is more than 20, it's very good. And if it is less than 12, one should avoid that bank. The next one is non-performing assets, that is NPA. Whenever we discussed about banks, we used to hear NPA. So NPA is one of the important parameters for banks. It is non-performing assets. Any payment which is defaulted beyond 90 days is termed as NPA. So whenever we discussed about NPA, there are 2-3 terms associated with it. First one is gross NPA, second one is net NPA, and the third one is provisions. So let's see each one by one. So for understanding these three terms, let's see an example. Assume Rahul took 1 lakh rupee loan from a bank and he pays the EMI for a certain period. After some period, he stops paying EMI. When the default starts beyond 90 days, it is termed as NPA. Assume out of 1 lakh rupees, he already paid 40,000 rupees. The rest of the amount, that is 60,000 rupee, is the gross NPA. So before start of the year, bank will keep some amount as a provision. They suspect some of the loan will not be coming back. So bank will keep aside some amount for non-performing assets. So let's say the amount of provision is 20,000 rupees. So net NPA is gross NPA minus provisions, that is 60,000 rupees minus 20,000 rupees, that is the provision. So net NPA is 40,000 rupees. So hope now all these three terms are clear. Next one is the Casa ratio. Casa ratio is nothing but current accounts to savings account. Why Casa ratio is important? Because for current accounts, bank need not to pay any interest, or we can say it's a minimum interest. As the current account increases, the bank will earn more because they will get deposit free of cost and they can disperse that amount to customers for loan and they can get good interest out of that. So as the Casa ratio improves, net interest income will increase for banks. So each bank will try to improve their Casa ratio. And one more term associated with Casa ratio is cost of liabilities. That will show how much money need to spend to get that amount. Cost of liabilities is the amount which bank need to incur for getting that amount. So along with Casa ratio, one need to see cost of liabilities also. If the Casa ratio is high and cost of liabilities is less, then that is a good sign. For good banks, Casa ratio is in the range of 50%, whereas cost of liabilities will be within 4%. So that we can take as a benchmark parameter and can analyze the stocks. So as the current ratio improves, it will generate good cash flow to the bank. And also for current account, the minimum interest or no interest to be paid. So the last important point is non-interest income. These are the income streams of bank other than the interest income. Income like loan processing fee, penalties, late payment charges, over limit charges, credit card annual charges, service charges, all these charges will account for non-interest income. This is a separate source of income for banks. So we need to track the non-interest income for banks over a period so that we can see how the bank performs on non-interest income. This is like a passive income for banks. Even though the main income of banks is through interest, but this is also important as it will generate some amount of money for banks. There are some other important points like presence of geographical location, like whether the bank serves in rural area, urban area, suburban area. Other parameters like segmental, whether the bank works in retail segment, in investment banking or wholesale banking, or whether the bank is a universal banking which comprises of all three businesses like retail, wholesale as well as investment bank. So the last one is year on year and quarter on quarter results. Results must be weighted on pre-year performance. But quarter on quarter also important mainly for some of the parameters like NIMs, that is net interest margins, NPAs, non-performing assets, etc. For rest all, mainly year on year will give a clear picture. So overall conclusion is these 7 points bank analysis will help you in analyzing the bank stocks. Let it be private bank, PSU, small finance bank, etc. So do this 7-point analysis before buying any bank stocks. So once you start doing 7-point analysis on banks, it will be good for you to get better hold on bank stocks. Thanks for watching and have a good day.
Please do like if you like the video and don't forget to subscribe to get the notifications of upcoming videos on personal finance and stock market. Please post your valuable comments. Do follow the Friday Basics to make your stock market journey easy. Thanks for watching and have a good day.